Hey, this is Tom Nash. Welcome to the Value Investor by Tip Ranks. In today's video, I want to talk to you about a company that used to be around ever since Richard Milhouse Nixon was president, 1968. And if you haven't guessed it yet, I'm talking about Intel. Intel is a company that's been around for decades, and it somehow went from being a pioneer in the semiconductor industry into pretty much, a lagger. They lag behind AMD, they lag behind NVIDIA, and the share price behaves accordingly. For the past 5 years, the stock did 51%. Yes, 51% in 5 years. Over the past 9 months, it did a negative 14%. That is while AMD did 34%. So you kind of see where I'm going with this. However, I think there's a good reason to rummage through the garbage and look at this stock again, because I think it's prime for a takeoff. And I'm going to explain why in a second. Now, it's no secret that Intel has been lagging behind the competition, and over the past 10 years, they've pretty much been plagued with everything in the book. Delays, manufacturing issues, bad decisions, bad management, but everything changed ever since Intel made a shift. They hired Pat Gelsinger. Now, Pat Gelsinger came from VMware, where he was a decorated CEO, and as a former Intel engineer who actually worked on the x86 project, he came back with a vengeance. Now, if you know Pat, he's not one to take losses. I mean, the dude is a winner. So he came back with a plan, and the plan is to completely reinvigorate Intel. Now, before I get through the plan on how to reinvigorate Intel and bring it back to the front, you have to understand that even though the narrative is that this is pretty much a has-been, it's not exactly the case. We're still talking about a very strong company with strong cash flows, strong business, strong presence, a lot of fabs on the ground, which most companies like AMD and NVIDIA just don't have. Now, this is a company that without the innovations and the changes and the reforms Pat Gelsinger is working on is still worth quite a lot of money. We're talking about a $200 billion company, 1.2% short interest. I mean, nobody's shorting this. Now, again, very solid company, very classic company. There's a dividend yield here of about 2.7%. It's a nice value stock. However, beyond the stuff that we have on the ground today, I want to explain to you why I think what Pat Gelsinger, the new CEO, has in store for the market may revolutionize the way people look at Intel. And if we buy it now for cheap, we might be in for a great deal. Now, Pat Gelsinger is looking at Intel for the next 10 years as a dominant force in two industries. So the first part of the project was basically to reclaim the lead, or at least be competitive against AMD. Now, the Ryzen series has been kicking Intel's ass for quite a while. However, this new Alder Lake lineup that Intel came up with is actually pretty strong. According to all experts who actually know this stuff, not like me, they're saying that Alder Lake is actually right there with AMD, might be even better. Now, at the very least, it's going to be competitive against Ryzen, and that's something we haven't seen for a few years. So, we just saw them on CES basically flexing the new Alder Lake, and at the very least, we're going to see some competition finally. But regardless, even if Intel loses to AMD and becomes number 2 in this business, they're pretty much competing in a duopoly. So whatever AMD can grab, they're still going to be second best in a two-headed monster game. I mean, don't see any problem with that. Now, the second part of Pat's plan is actually very interesting. Even though Intel kind of stayed behind, it's pretty much the only US fab, they haven't been really producing chips for anybody else. And that means they're going to have to go head-to-head against TSMC, which is pretty much a monopoly in this industry. However, that's not as bad as it sounds, because TSMC can't handle the load. Even after increasing capacity, putting $100 billion in capex over the next 5 years, still can't make enough of these. They can't meet demand. So there's definitely more room, even if Intel is not trying to take TSMC's lunch. There's plenty of lunches to go around in this business. If you can make chips in the next 5 years, you're going to sell them. And guess what? Intel is probably the only company out of TSMC that actually can do it. AMD don't have a fab. NVIDIA don't have a fab. Apple is kind of trying to do their own thing right now. But basically, them being a fab, which is something which was criticized for many, many years, by them not being innovative enough to cut it out and let TSMC do it, now might be the lemonade coming out of the lemons. Why not? And just looking at the fundamentals, and again, we're going to go through the DCF in a second, and we're going to look at what other analysts on TipRanks are saying about this. But we're talking about a $200 billion company that gives you 70 to 80 billion in revenue every year, about 20 to 25 billion in net income every year, 27% margin, net income. I mean, this is pretty phenomenal. Look at their margins. Gross margin 56. That's way better than AMD's 45. Look at the multiples. They're trading at 2.6 price to sales. My goodness. Look at AMD trading at 9. They're trading at sub 10 PE. AMD is at 34. I mean, I get it. AMD is the better product and they are kicking Intel's ass. But are the differences that justified? 34 versus 10? I mean, is AMD really 3.5 times better than Intel? At this point, I'm not so sure, but I want to share with you my DCF to show you my valuation so you get to see where I'm coming from with this. So let's look at the DCF for Intel. This is 2021, 22, 23, 24, 25, 26, the next 5 years. Now, as you can see here, I applied extremely conservative growth, 35 billion, 36, 37, 38, 39, 40 billion, nothing extravagant. Now, also, we have 21% tax across the board. This isn't the nominal tax Intel's going to pay in the next 5 years, but just trying to be conservative here. We also applied a $90 billion capex over the next 5 years and a 10% discount rate across the board, which is still considered quite conservative, a 4% perpetual growth, and a 10 multiple, even though I think they deserve more, but let's use a 10. And this is what we got here. A total DCF value of 238 billion and a total multiple value of 316 billion. If you scroll down, what you're going to find is something very interesting. So right now, the share price is a little bit under $51. We have a combined rate of 59 and 78, which gives us a 68, a 34% upside on this battered stock, which I think still has a lot of gas in the tank. So let's take a look at what other analysts are saying. So they're pricing it at $57, which is a nice little 12% upside. I got it at a little bit higher. But as you can see right here, the bear case is $40. Average price is $57, but some of them have it at about $80. I think with the chip shortage, supply chain shortage, and inflation, and the shift towards value stock, and the fact that Intel has fab capabilities gives me probably significantly higher amount. Now let's take a look at John Pitzer here from Credit Suisse. He's ranked number 13 out of almost 8,000 analysts. And he covers Intel. He has probably the highest target price on TipRanks right now with $80, giving it a nice little 57% upside. He's been covering the stock forever. Look, he has 54 ratings on the stock. 33 of them were correct, which means 61% upside. You don't make a lot of money on a stock like Intel, but in 2022, you need a little bit of security. And I think this guy knows what he's talking about as far as Intel goes. So I think this sleeping giant might actually wake up. We might have a thing here because over the next 5 years, I think Intel can actually become a force in this industry again, plus take over some new industries. And even if they stay remain number 2, they're still about to make a whole lot of money, and they should not be trading as if they're a has-been company that's about to go out of business, because they're not. So in any case, I think this is one of the best value investments you can do right now. But love to hear your opinion. Comment below. Let us know what you think. We'll see you in the next video.